So getting started, we're gonna dive right in. I don't really read or do a traditional bio. I'm not going to explain to the world like who and what you are. They can find that out. They can find your LinkedIn. We're a little bit more. We're trying to be a little bit more relevant than that. What I'd like to start with is if you could actually tell us a little bit about what your business is today. We're going to talk about different times in your experience and the journey, but what is Passiv now, and maybe that'll be your intro for the rest of the group.
Yeah, sure. So yeah, my name is Brendan Wood. I'm one of the founders of Passiv. Passiv is a company that sells software to help people manage their investments. So we were founded here in New Brunswick about 4 years ago, and it's been a long journey. It took a few years before we actually started taking things seriously, but now we're a legit small company. We've got 11 people working with us. It's been an interesting adventure.
So just to pick out one thing, when did you actually say that we're now a legit? What is legit for you in the way of a small company?
Legit is like having enough revenue to make sure you can sustain yourself. If you're not at that point and you don't see that point in the future, maybe you're not quite legit yet, I guess.
Yeah, there would be a lot of people probably who would dispute that. So I know just enough about software and platforms and the SaaS model, all those things to be dangerous. It's not my wheelbase for sure. But my assumption is that over time, your original idea, your original technology has had to adapt and alter to match the value proposition of the customer you're trying to chase. Am I right in that? And what was the journey like? How much change has there been over time?
Yeah, so the original version of the product wasn't even a product at all. It was a script that I wrote for myself. It was a little piece of software I used to solve a problem I was having managing my own investments. And so it started as that, and it kind of gradually evolved into something that virtually anybody can use to connect to a brokerage account and manage their own investments. In terms of how the software is positioned to the customer and what problems we're trying to solve, it's actually undergone remarkably little change since the early days when we launched it. In fact, it's probably changing more rapidly now than it ever has in the past, which is interesting because at this point we have a customer base and we know that people like the product, but we see all these interesting avenues where we can evolve it and sort of tweak the way it's positioned.
I love the audience of one. I love the idea of creating a business or going into business because you yourself would like to have that business.
Yeah, well, it's kind of it's an interesting hack because if you don't have a customer, then you don't really know what you're building. And if you are your own customer, then you get a really tight feedback loop where you can immediately see, does this solve my problem? And if it doesn't, then you're not there yet.
And then you just hope that you're not alone.
Yeah, and that's the thing, right? So that was a big part of the first couple of years of the company was or am I the only person that would really benefit from this?
Yeah.
I know there's people out there that had the same sort of need, but then finding those people and getting them to use the product and seeing whether or not it actually solved their needs. If I'm correct in asserting that they have the same problems I do, right? That was interesting.
And so we covered when you think it was legit, but I'm curious about when you actually started thinking of yourself as an entrepreneur. Where would that happen?
That happened in April 2017. I mean, it's been very much a smooth progression. There's not a lot of cliffs that we had to cross where you would say, yeah, this is the point. But if I had to pick a point, I would say it was when my business partner and I decided we were going to work on this together, and we got a founders agreement done between us so that we kind of outlined our own expectations and how we were planning on pursuing this opportunity. So prior to that, we already had a proof of concept at the time. In fact, it was on its third iteration at that point. So it was fairly well developed as a concept, but it was not public. No one could use the product. It was still being privately developed. And, it was very much this is an interesting side project. Let's just poke around and see if we can see if it's worth pursuing. And so we agreed we were going to do it together under these terms and said, let's just launch something and see if people use it. And that's all it was. And that was the point where we said, okay, we're actually doing something here,
So when did you go all in? It sounds like you were probably employed and that this was still a side hustle. When did you make that leap, or have you made that leap?
Yeah, we made the leap in 2018. So it was over a year after we had agreed to work on this together. That was when both of us went full time. So we ended up leaving our other jobs and saying, this is a big enough opportunity and we're seeing enough positive signs that let's just do it.
So how, I don't need any details, you choose where to take this, but how was that decision to make? Was it clear and easy, or was that a lot of
No, it really wasn't clear and easy. Like it's everything is kind of like muddied a bit, especially if you're not making money off it yet. Just because we saw people using the product and telling us they liked it, and having some I guess one of the brokerages that we support, they were helpful, and they told us, we like it, you should do more of this, right? But we still weren't really making any money, and so it was very much a leap of faith. And it also wasn't like a single day when it was decided. It was more like my business partner, he went full time first, and so he was just kind of like working on partnerships and getting deal flow and getting customers using it, while I kind of maintained the product in my like downtime. And then, a few months later, like it was sort of like a rising tide of stress, where like more and more of my time was being consumed by Passive, and eventually I realized I can't really do this and my day job, and that was when I was like, you know what, it's time to take the leap.
Yeah, and I think it's important to like pull out there in case people didn't notice that you took the leap and you made the leap of faith and all these things, but after a considerable amount of time and iterations and product feedback and validation. I know a lot of people who are like, "Oh, I'm not serious unless I go all in." But I talk to a lot of people, like they hedge their own risks. Not all entrepreneurs have to be all risk takers all the time, which is
That's right.
yeah, for sure.
I honestly, I think you'd probably be more likely to succeed if you're able to hedge your bets to some extent, right? If you
Yeah.
jump all in on something when it's too early, sometimes it just takes a few years for something to develop to the point where it's worth doing.
Yeah. You mentioned your founder agreement, and you have a business partner. That's something that hasn't come up, and I talk to a lot of people who struggle either that they really want to have a business partner, but the idea of finding and getting that relationship going is complicated. But also, like if you wanted to chat a little bit about how that came to be, how did it end up being a partnership, and any lessons you learned either from things you wouldn't do again or things that you would recommend other people did in the future.
Yeah, so we took a pretty unorthodox route. Um, Most people who decide to join together and be business partners and found a company together have like known each other for some amount of time, and there's some degree of trust and rapport between them, right? And that was absolutely not the case for us at all. Like we had met each other like less than a month prior to us sitting down and doing up this founders agreement. Um, and why it happened that way was really like, I didn't personally know anybody who I'd be comfortable starting a business with. And this was somebody who I'd recently met. And I very quickly got the impression that he would compensate for a lot of my own shortcomings, and kind of like bring value to things that that I'm not personally good at. So one of the things I like to say is like I have an email bandwidth of like 5 emails a day. Like I can respond to 5 emails a day, and like after that I'm done, which is not very helpful if you're trying to like respond to customers or network with enterprises or whatever. So him, on the other hand, very different story. He can handle that stuff a whole lot more easily. But I also have the tech chops, and he not so much, right? So it was kind of like a nice balance.
So one of the sayings I always hear as recommendations is try to date before marriage. How what actual practical steps did you take to make sure that you're aligned?
I feel like I'm a pretty good judge of character, which is probably not a very like repeatable bit of advice. And to be honest, I'm not sure I would do the same thing again today if like I decided to start another company and try it again. It's a very risky thing to do, because if it turned out that it didn't work out, then the whole company would essentially fall apart over this. Um, I guess I was comfortable doing it at the time because it was something we weren't taking seriously. And I knew that if I didn't have somebody working on it with me, I probably just wouldn't pursue it at all. I was pretty happy with the day job I had. Um, why would I go out of my way to mess that up?
Yeah.
So yeah, I guess the stakes were low, and early signs were positive. And then we, very quickly put together a founders agreement where we outlined mutual expectations, and like just having those few things squared away kind of gave us the confidence to move forward with it.
At least a little bit of paper between you to make sure that you covered those areas.
Yeah, and not even about like being able to, hold each other to something or litigate each other. It was really just like, let's write down the things that we expect to get out of this mutually. And, that way we're sure we're all on the same page.
So everything sounds. I mean, there's definitely some complexity to the timeline, but the everything seems like it's been generally positive. The way you're telling it, anyway, it sounds like it's generally positive. One of the questions I'd like to ask, and I'd like to hear from all kinds of entrepreneurs, is now that you've been a few years in, what are the mistakes you made that make you cringe the most looking back? And you can choose how far to go, but I mean, I've never met an entrepreneur who has it all together. And I can think back to lots of mistakes I made that I'm just like, what the hell was I thinking? And I want to share these little tidbits for people who might make the same mistake.
Yeah, probably the one that comes to mind, the first, it would be our product launch. So within about a week or so of when we had signed this founders agreement, like, we already had a proof of concept that was working fine on my investment accounts. And, from what we could tell, it should work with other people's accounts. It was just done in a relatively generic way. But we didn't really have the ability to test it because you need brokerage accounts that are funded, and like there's a bit of a hurdle to get one of those. And we said, you know what, let's just move fast and break things. Let's just launch this and see if anybody is going to use it at all. So we went on Reddit and we launched it, and we had probably 15 or 20 people sign up within like a few minutes of it getting posted. And we thought, cool, they're actually, people are actually signing up for this. This is amazing. Our first 20 users. And immediately the comments started coming in being like, doesn't work. I try to connect my account, it gives me an error. Doesn't, it shows me this thing, and people are posting screenshots of the, their brokerage account saying that, they're trying to do something they're not allowed to do, right? And it just did not work for anybody except me. And so that was like, a huge bomb and a kind of a blow to our confidence, in that we thought we had this thing that was ready to go, but we didn't. So it turned out what we needed to do was actually get like an API partnership agreement with the brokerage in order for other people to be able to use this app besides just me. And that was something we didn't know. It wasn't documented anywhere, like in the API documents that we were looking at. And so it took us about 3 months to actually get like an agreement squared away with them. And then finally we're ready to launch it again. And so it was like, that was April 2017 when we launched it the first time, and it failed miserably. And it was June by the time we did it again. And that time it worked.
Nice. So that's a downside. You overcame it. That's all great. What would you say is the most exciting moment that you've had in business, especially since taking the leap? What's and for a lot of people, it's not always revenue tied, but what has been the most exciting part of your journey to date?
I would say it's like having a product that people are using and that they seem to be enjoying. It's sort of like self-actualizing your own vision and finding out that like a lot of people appreciate it and are getting value from it. So just to kind of like put that in context, in terms of like assets managed by Passiv. So we're not managing the assets ourselves. It's more like a tool for users to manage their assets with it, but we still measure like the total amount of connected assets to the app. So we're approaching $1 billion in assets being managed by our software. And if you want to try to measure what the value is that end users can be getting out of it, you could compare it to what they would be paying in fees to have this money managed in, a typical mutual fund that you would get from a bank, and what the cost of that would be. So basically, if the funds that are currently being managed by Passiv were instead in a mutual fund, that would be costing our customers like $15 million a year as a management fee. It's a crazy amount of money, and it's I smile every time I think about like all the savings that people are getting out of this. And
so you're like the Robin Hood effect. You're stealing from the banks, delivering to the people. I love it. So a couple of things I'm curious. Like I know a few people in different software businesses, but it seems like the trend or the thing they always talk about in the startup communities, and I think you've done some incubators or accelerators. It all is about investment and capital and venture and angel, and from the outside looking in and having talked to you so far, it doesn't sound like you took that traditional path. I'd love any insights you had on like how you chose to finance and take this business and grow it, and any recommendations you'd have for other people with a good idea that could be done with software.
Yeah, for sure. You're absolutely right in that perception of software in the startup space. There's very much a focus on like build something really quickly, test it quickly, fail fast, raise a bunch of money so you're not taking the risk personally. Like there's sort of a defined path for how to do this, and it's all very risky and involves basically doing a lot of work selling your product to investors before you even develop a product for the most part. It's a seductive vision for sure. You can't go a day without seeing like, oh, so and so raised so many $1 million to go do this amazing thing and change the world. And it's easy to be able to picture yourself there and like, oh yeah, I'm doing that too. I wish somebody would do a piece like that about me, or give me a bunch of money to go do this thing. But it turns out that's actually a pretty rare thing. You hear about it more often than it actually happens. For every venture funded business, there's probably 20 to 50 businesses that aren't. And it's not even necessarily appropriate for most businesses to receive venture funding. And, you might think there's not much of a downside to it, but getting that money into your company can also make you scale before you're ready to scale, and increase your burn before you're ready to do that. And it essentially forces you to swing for the fences, which is not necessarily what you should be doing in the really early days. The most important thing to be doing is just talking to your customers and understanding what their pain points are and whether or not your product meets that mark, right? So for us, we're a bootstrapped company. We did raise a little bit of money from friends and family, but we've never taken any institutional money. We did poke around, we've spoken to a few dozen venture capital firms over the years, and it never really made sense. It seemed like every time we talked to them, they would be, setting up some bowling pins down the road and saying, okay, go knock those down. And once you've knocked those down, come back. It's too early. It's too early for us to talk to you. And so we go knock those down, and then we would come back for another conversation and say, oh, that's cool, but I bet you can't do it again, And they did this long enough so to the point where we're actually a successful company and we don't even need their money anymore. So in that sense, it worked for us. But I kind of think about it every now and then, what would have been different if we had, really pushed hard and found a way to make a deal. And I feel like we would have ended up burning a ton of money and probably being worse off for it in the long run.
It's nice to have that hindsight and having made some of the right decisions.
Yeah. If you ask me about, wrong decisions, to some extent, we wasted a lot of time on trying to pursue investments. And that's one of the things that is probably not well understood by anybody who hasn't tried to raise money before, but it's very distracting. You essentially need one member of your founding team, which in our case would have been half the company, dedicated full time just to pursuing investors and trying to sell them on this vision of something that didn't exist. That's distracting, and it means that half of your team is not focused on the thing that matters, which is the product.
That's really great insight. I wish more people would get that earlier, for sure. I just was involved in listening to some of the Apex business plan competitions submissions, and the app is everything was hockey sticks, and it was all we'll get investments, Series A, Series B. It's ooh, yeah. So turning a little bit away from just specifically about your business, I have my team do a little bit of a scan for internet research just to see if there's anything that comes up that I wouldn't think to ask myself. One of them was, and I think I would have seen this just from being in seeing you from an external point of view, but it sounds like from your internet persona, the things you can scan off the internet is that you have a really good balance of non-work activities and interests and passions, like woodworking and outdoors. And I think that's a real struggle with a lot of people who are growing and scaling a business. And I was wondering if that's a conscious decision, or if you've put anything in place and first of all, is it true, or is this an internet fact? But anything you've learned the easy way or the hard way that has made that possible, and what your thoughts are on it.
It's very true. I try as hard as I can to keep a balanced lifestyle. So, I love working on my company, and it's inspiring, and it gives me a reason to get up and, do something every day. But on the other hand, my family is that as well. And to some extent, everything I'm doing at the company is because I simply want to have a better family life in the long run, right? So knowing that, and knowing that my kids are young now, and this is the only time they're ever going to be young, and I want to be there for that, I intentionally limit the amount of time that I spend working on the company. I think my wife might say I work a bit too much on it as is, but it could be a lot more. I know a lot of startup founders will put 60 hours in a week on their company, and it's you could do that, but is that sustainable, and at what cost, right?
Yeah.
So yeah, I very much try to have hobbies and things to do outside of the company, and woodworking is one of them. That's I found that to be like a really good way to get away from the computer. I spend almost all day, every day, just staring at a screen, writing code, managing projects and stuff. And so to be able to just, work with my hands and power
Yeah.
tools is a very nice change
So
of
it,
pace.
unfortunately, it almost sounds like you're just saying we need more self-discipline, which, yeah,
Yeah. Well, but yeah, self-discipline is part of
yeah,
it, but it's also like, if your company is not doing so well, then
yeah,
or if you're just kind of, getting things off the ground and you don't have like a solid financial backing to fall down on if things don't go well, to some extent there's a pressure to do it. And if you don't do it, then you're kind of like staring into the abyss. So it's I think it's kind of fundamentally at odds with being an entrepreneur. Like you need to have the passion and the drive and the will to see it through, but it's very hard to do that and keep things balanced.
speaking of your like non-work community and family, I'm wondering if I am assuming that you're getting asked for investment advice pretty much 3 times a day forever. And I was wondering,
Yep.
how do you, because a lot of people are in that position, whatever your company is, your brand is, your personal brand becomes a little bit of your professional brand and vice versa. Any way you've learned to manage that, or any thoughts on that?
Well, one of the interesting things about Passive is that, like I mentioned earlier, uh, we don't manage people's wealth for them. We give them tools to manage it themselves. And due to like the regulatory framework around, securities laws and that sorts of things, we're actually not allowed to give advice as a company. Like we can't tell you what to invest with your money. So that makes for a really easy cop out when people say, "Hey, should I buy this hot stock? How's Tesla looking? Oh, I heard you were into crypto at some point. Tell me what you think." It's very easy for me to just be like, "We can't give advice."
I'm sure that's all wonderfully received all the time. So looking at the future, I assume you have some goals. You made the leap. You're legit now. I'm interested in what you have, or do you guys have like an articulated vision of what you think success looks like? Do you have something you're shooting for?
Uh, Not exactly. I mean, like it's not like we're looking forward and seeing there is this, endpoint in the future where if we achieve this, then we're done or whatever, right? It's more like we see ourselves in like this vast ocean and we're, gradually growing and expanding and trying to provide more usefulness to customers. But it's hard to say. Like there's definitely not like a fixed goalpost that we're trying to meet. It's really just like we look at our numbers on a monthly basis and we want to keep them going up, right? We look at kind of like the history, and it's very hockey stick looking, right? And you look at over whatever time frame you choose, and it has the same sort of hockey stick type profile. It's really like, okay, if we just keep doing what we're doing for another year, then we should be this much farther along, and if we continue beyond that, then so on. And at this point, we're still so small that it's not like we're approaching the limits to which you can hit on growth, right? It's not like we're saturating the market or anything like that, and we're so far away from that we don't even really need to think about what the overall total market size is. It's like, no, we're just kind of growing in this little niche, and it looks like it looks boundless at this point because we're still so
Yeah, I
small.
guess, and the reason I bring it up, and it sounds like you have a really holistic or even a healthy way of viewing growth and the opportunity. I mean, I talk to a lot of people who it's around like they're trying to get the exit, they're trying to get the sale, or they're trying to get the liquidation, or like there is a horizon.
Mm-hmm.
The and I guess I'd love your thoughts on. I'm really interested in seeing what some of these technology companies could do if they grew and stayed versus exited and left. So that's why I ask a lot of
Mm-hmm.
questions around like what your goals are, what your growth is. Like if you hit the hockey sticks by all the generic definitions or objective third party, what would you do then? Is this like I can't wait to retire, or do you picture yourself managing large teams of people? Like what's your thoughts on a growing tech company in New Brunswick?
I like the idea of maintaining ownership of it. Obviously, like an exit is a possibility, like, and it's not something that we would necessarily say, no, we're never going to do that. But it's not something we're looking at the moment. We're still, you know, we think we have a pretty strong competitive advantage in the space we're working in, and to sell out at this point would kind of be um, to some extent, like, I don't want to say failure, but it would kind of feel that way, right? It would feel like, oh, okay, we gave up on it before we saw it through, you know? In terms of like, visions for the future, we see this world of like decentralized finance where instead of, keeping your money under one bank and one brand, you have the flexibility to do what you want with it. You could have it in different places. You could use whatever service is the right for you rather than whatever your single institution happens to provide, right? And so it's very much like a long-term vision of unbundling finance and wealth management. And so to, stop doing it at this point, it would feel like we kind of given up on that. Yeah, it's
Yeah, I mean, it sounds like the goal is to change the world, not necessarily to grow and sell a company, which I like. I think that
that's right.
I'm hoping
Yeah.
that more people have and articulate that as opposed to what they think they should say in front of investors. Because that's one of the other things you mentioned, that what changes when you take
Right.
investment. Investors need a liquidation moment, so it does change.
They do. And when you're talking about like people seeing us in terms of like, milestones and like time to the next thing, right? I think that maps really well onto the venture capital model of funding companies, right? Like, you do your seed round, and when you do your seed round, a critical part of it is like to show them a projection of like, here's when we're going to need the
Yeah.
next cash injection, which is counterintuitive. You would think, oh, why would they want that? Why wouldn't they want to just see that you're doing good and you're sustainable? But the cash injection is the point in which they inject more rocket fuel into the company and take a bigger ownership stake and set out the next few milestones for you to meet, right? And so everything is sort of tranched according to like what's the next big thing. And it works in some ways, and in other ways, I think it's actually a bit of an unhealthy way to look at building a company, because you should be kind of like growing, but also like continuously evaluating and knowing whether or not you need to change your positioning at any given time. In which case, like the old goalposts may not
And
even make sense.
I think the healthiest thing from my point of view is just making sure more people are aware of the choice, that it is a choice. There isn't any one way to skin the cat, for sure. One of the interesting, and this will timestamp us a little bit, we're in the middle of a pandemic. I'm interested, my assumption is that whatever growth you might have seen pre-March 2020, that things are accelerating. It sounds like your sector and your ecosystem is actually a place where you'd see a bit of disruption and digitization. Am I right in that? And what has been the pandemic effect on your?
Yep, that's absolutely correct. The finance and like wealth industries in general have been in a bit of a boom since the start of the pandemic. It's particularly in the digital space, right? I mean, people are going into their banks less often. They're going, digital for as much as they can. So, I guess like just in terms of brokerage accounts, like that's probably the most connected thing we have. Not so much banking, but brokerage services. Brokers have been growing really quickly. Market volatility has been absolutely unheard of, and that kind of drives people to talk about stocks and to think about investing, and then to go open accounts and then fund it with their money and then make trades, right? And so it's sort of like this feedback loop that's driving everything forward. And so, we've seen a lot of growth in the last year. It's been our most successful year by far. Probably a portion of it, maybe a substantial portion of it, is driven by the pandemic. But again, we're also continuing on that same trajectory that we've had since day one. So if you were kind of like look at the different time segments over the years, they all they line up pretty closely.
I do have a couple of questions coming in from the room, and it comes down to a little bit of team. So I know that you now have more than just the two of you, because now you're legit. I was wondering, and I'm curious as well, is when did you decide to grow your team beyond just the two? And how did you, like, tactically and as a process, approach hiring and all those things that that likely were new for you guys as business owners?
So our ethos in general is like never do something until you actually have to do it, until it's like painfully obvious that you have to do it. And because we're self-funded and largely like bootstrapped with the money that we've been earning from revenue from doing this, we don't have the luxury of hiring people too early, right? So that made it a bit easier for us. Our first hire. So myself, I'm Brendan. My business partner, he's also named Brendan, which we thought was kind of funny. Two Brendans founded a company together. Our first hire, we hired in February 2018. So before either of us went full time on it, we hired somebody to help us like develop the product because we knew that we didn't have enough bandwidth personally to do it. His name is also Brendan. So there were three Brendans working on this for the first few years, and he was our only employee for the first while. Until it was well over a year until we hired our fourth.
I'm going to talk about, this is a generalization, not knowing anything about your business. People who are product or technology people who they have a trade that they're really good at and they build a business from it. Sometimes the human resources added to their hats that they wear is a bit of a learning curve. How did you navigate that, and what have you taken as steps along the way, or have you been kind of making it up as you go?
Make it up as we go, for sure. It might not sound very good, but that's the reality. Like my previous job experience, I was managing a team as well, and so there was a bit of like HR side of things there, but it was always on a relatively small scale, which makes it a whole lot easier to manage, right? It's only more recently, like within the last year, that we've had the team grow to where it is, and there's still HR components and like lots of things to learn, but a lot of this is. We're actually able to like sidestep a lot of it just by like having one or two policies of like we just don't hire people that we don't want to work with, like make sure that we like the people personally and that they're not that they're team players and they're not rude and that sort of stuff. So just kind of like basic filtering for a cultural fit, and it makes everything so much smoother.
I think I've been working with an HR consultant recently. I think that you're doing the newest trendy thing in HR is hiring based on value alignment. It's like technical term. There you go.
Mm-hmm. Yeah. Yeah, that's a pretty good summary of it. Yeah.
How did you actually approach finding your very first customers? That's another question from the audience that I thought was a neat look back at your startup.
Mm-hmm. Yeah, sure. So when it was, June 2017 that we successfully launched the product publicly, and we got our first 100 or so people using it. But it was a free product at the time, and we had like no concrete plans for how we were even going to charge or make money for this. At the time it was like, this is interesting, this is fun, we can provide this at almost no cost, let's provide it and see if people use it. And there was no revenue model, there was no concept of like how we might make money at some point. It was more like, we will figure that out, if it's necessary. Maybe it's not necessary, right? So after a few months of that, I guess, fall 2017, we did Propel ICT's launch program. And one of the big focuses in that program is, excuse me, it's sort of venture oriented, but not necessarily like only venture capital. Like that's something that's discussed, but it's not the end all be all, but they still kind of like show you what that process looks like. And one of the big focuses is like get people to pay you for your product as soon as possible, which is a very, very good piece of advice, because you don't really know what value you're providing until people are forced to think about whether it's worth money. So it was, fall 2017 that we said, okay, let's just see if people will pay for this. And we didn't even have any features that we thought were worth paying for at the time. So the very first thing that we did was we said, hey, we're going to release this feature in about 6 months. It's going to be the ability for you to place your orders through Passiv. So at that point, we were a very simple rebalancing engine. We'd look at your account, we'd compare it to your target and say, here are the trades you need to make. And that was it. There was nothing else there. So one of the big remaining pain points was like, now you have this list of like 10 trades you need to make. Go log into your brokerage account and manually place every single trade. We realized that we could automate that. And so we said, okay, we're going to take pre-orders for this feature. Anybody who wants this, you can sign up now and we'll give you a massive discount for paying for it before it's an actual thing. And we're going to keep this discount for 2 years. And so we basically gave people a sweetheart deal to give us their money before there was even anything worth paying for. And we got enough people signed up from that it was very clear that this is something people want. They're willing to pay for it. Obviously, it's with a steep discount, so the pricing thing is a little bit hazy. But at the very least, we know people are willing. It's worth something, right? So we got probably 30 to 50 people who agreed to pay at that point. And it was still a very small amount of money, but it was enough for us to say this is worth building.
It's almost like crowdfunding it, only through your own network of clients.
Yeah, basically.
So I'm going to make another generalization because I think we're similar in that we're probably um, really level-headed, not quite emotional people compared to others. I'm just saying that on my own because you're very calm and collected. And every time I've talked to you, I was wondering if there's any point you look back in your business journey, especially from making the leap to working there full time, that you would articulate as the scariest time for you as an entrepreneur. Because I don't know any entrepreneur who hasn't been scared, and most of them don't share it. So you feel free to go wherever you want with it. But I was wondering if there's anything that you'd share with others.
Sure. So there was a period of almost a year, which was pretty terrifying, and that was after I had like taken the leap and quit my job to do this full time. The company didn't have enough money to pay anybody any salaries, except for the one employee that we had. Here's the third Brendan. So he was getting paid, and myself and my business partner were not getting paid. And we had, left our jobs to do this. And so that was a scary moment because we're like, we haven't really figured out the revenue side of things yet. We have a plan, but we don't actually have the cash in the bank. What are we going to do? And at the point that I took the leap, it was in August 2018, we had some very promising avenues for how we were going to make money relatively quickly, but it needed a lot of focus to actually make it happen in the short term. And then, took the leap. And over the next few months, it turned out that it wasn't going to happen. So like this thing that it was a sure thing, and this is going to make us a lot of money really quickly, didn't end up happening. And it wasn't going to happen for the foreseeable future. And so, at that point, we're kind of like, well, this is kind of scary. How much longer, like the situation under which I left my previous job to do this is no longer true, and it won't be true for the foreseeable future. Does it even make sense to keep doing this now? The thing that we thought was going to happen, like the assumption we had, was invalidated. At what point do we cut our losses and say, let's, say, for example, I'm going to take another job and do that job? And I almost did. I actually went through several interviews and had a couple of job offers let me see, this would have been January, February 2019. So this was, about 6 months after having left my full-time job to do it. It looked like, it simply wasn't going to fly. And so I took interviews, I had job offers, and I was about to accept it. And then the thing we were hoping for came through, and it gave us like a little bit of hope. Even though it wasn't making us a lot of money, it was like a sign of hope that there was a light at the end of the tunnel. And I basically told the people I wasn't going to take their offers and thanked them for their time and continued doing what we were doing. But yeah, it was terrifying. And it continued to be terrifying even after that, because it was still almost a year after that we were making enough money to pay anybody any meaningful amount of money.
Some of my external best times ever, if you read the paper, were the scariest times ever under the hood. So that brings me to a thought, like one of the reasons why I work with so many entrepreneurs and groups of entrepreneurs and forums is I believe that it's a very solo journey. And I know you have a partner, so that's got to be a big of assistance. But when it comes to being able to talk about challenges that most people just won't understand, or problems that come up that are complicated and you just like can't learn in school on how to fix these things, what kind of supports are you using as a business, or you and the other Brendans are using as a business to navigate those? Like what kind of advisors or supports or services are you using to help you grow your business?
So having a business partner is very helpful. It's like having a sounding board for knowing whether or not you're nuts. You kind of like collectively make decisions that are probably smarter than either one of you could do on your own. So in that sense, it's really helpful. And we know when the going gets tough, it's also helpful to have somebody that's like experiencing it and knows all the horrible details that you wouldn't otherwise tell anybody, right? So, we're members of like, different entrepreneurship organizations in the area, like Venn, for example. They're a great one. And when we have issues that we're not really sure how to address, we reach out to them occasionally and say, hey, we're doing this thing, we're not really sure how to do it. You guys have any experience with that? And they almost always have somebody who knows something about the thing we're asking. So between them and between Propel, so that, we did this launch program with Propel in 2017. We went back in 2019 and did another program with them, which was a little further along. And they essentially have entrepreneurs and residents who are available to take your calls and talk to you about these things. And most of them, they're entrepreneurs and residents. They've gone through a lot of these similar issues, and so they've got their own war stories. And the cool thing about these organizations is that it's not like they're necessarily time limited, right? So, the programs have a finite duration, but once you've gone through them, you sort of have this ongoing access to them through your network, right? So, and they seem to be always willing to reach out and chat whenever
Yeah,
you've
and I
got
think
something you
that's
want to bring up.
like whether you learn this through your past experience or have it, like one of the things that most people who are balanced and successful are willing to share when they don't know, or they ask for help, or they join these programs, and I think that's whether you did that by design or lucked into it. But I like to make sure that we talk about the support networks and the call a friend options that a lot of successful people build, the tool belt for the things you don't know you have going wrong yet.
Yeah. I mean, one of the things about it though is that like these people can't solve your problems for you. They can often help you if you have like a very direct question, or they can listen to you complain about something if it doesn't go right. But at the end of the day, it is very isolating in that nobody's going to solve your problem for you, and you kind of just have to own up to it
So
and do it
I'm
yourself.
assuming just by what I see externally that you're well read and educated, and that could be completely wrong. But one of the things, and I say this often, is I think that I really enjoy a good podcast. I really enjoy a good book, but about 98% of everything out there is garbage. So I was wondering if you had any recommendations of things that you really think change your perspective or deliver really interesting new thoughts about either business, entrepreneurship, or the business you're in.
Yeah, I mean that's a really good question. There's a
Mm.
book called Rework. So it's by the guys who founded 37 Signals, and they're basically like, I guess you could call them like a software consultancy or something like that. I mean, they've got products as well, but they're basically a relatively well-known but small to mid-sized company that's actually been really successful at what they're doing. And their whole philosophy on building a company is that you don't need to take the obvious path of like trying to go raise money and like building this big thing with thousands of people working for you and building an empire. It's perfectly fine to build something that solves somebody's problem and make enough money that's worth your while to do it, and then leave it at that, keep it running. Like they're chasing growth endlessly is not really the answer if you're trying to build
Yeah,
a business
for
that works
sure.
for
I love
you,
that book. And I talk to a lot of people that I don't believe that success is growth or success is large sales. Success is achieving goals. So taking the time to articulate why you're doing
Absolutely.
something, I think, is a really important step. Another question that was really good that was put in there. Once you started the business, is there anything that you like that sticks out as something you regret, something that you would have done differently at the outset?
That's a good question.
Something you feel comfortable sharing?
We did have to lay somebody off at one point, and that was like essentially a result of hiring too soon. So it was our second employee that we hired. She worked with us from let me see, 2019. Most of 2019 she worked for us, but we had to lay her off because we simply weren't making enough money for it to be sustainable, and that was a really hard thing to do. And it hit me hard because I knew that it was like directly my fault, right? It was like we failed to achieve these goals we set out to do. We hired somebody before we had the money to actually like be able to afford to keep them on in the long run. And now she's the one who has to bear the brunt of it. And so that was like a really hard thing. And I kind of wished like we had at the point at before we'd hired her, we'd simply said it's just not realistic to have anybody else on the team, right? Instead we looked at the opportunities that were coming and like said, okay, we're going to do this, we're going to hit all these milestones, it's going to go perfect. And there wasn't really enough room for error
Is that
baked
where your
into
ethos
the
came
model that we
from,
had.
to not do anything until you absolutely have to? Or did you have it before?
No, I mean, we always kind of had that ethos, right? And it was, and that applies to everything, not just hiring people, but like, you look at the systems that we run our services on, and, we keep it as simple as possible and avoid unnecessary complexity wherever we can. So, there's this thing where like if you want to host, if you're a tech company, you should get on Amazon Web Services and you should have redundant databases in multiple availability zones, so you could survive a nuclear strike if you wanted to, and your application wouldn't fall over. You can build that level of redundancy into your app if you want from a very early age. But when you do that, it increases your cost massively, and it also increases the complexity of having to manage that stack and keep it operational. And so that's a great example in that you can do that from day one. And if you do, great, but really nobody really cares if your app goes down for 5 or 10 minutes here. I mean, obviously, it's not something that you want customers to run into, but if it happens rarely enough and it's not like a mission critical thing that ruins their day if it doesn't work for 5 minutes, then it's not such a big deal, right? And so our stack was actually run on a single dedicated server in Quebec for, let me see, about 3 years. It was just like one computer running everything in a data center, and there were no external services, and it was super cheap and also not really that reliable. I mean, the server never really went down, but the occasional user who would come in, they'd be like, I notice your IP address is in this data center. Don't trust them, It's like, well, but we didn't actually bother putting the effort into building a bigger, kind of more complex, more reliable system until we had a certain number of people using it, and we're like, okay, what is the expected cost of downtime now, and is it worth putting the effort into it, right? So whether it's that or making architectural choices or hiring people, it's all like we just don't do it until it's painful.
One other question, because one of the things we help a lot of businesses with is their automated marketing and maintaining their marketing strategies. But we don't work with any software companies, so I'm curious about what your marketing strategy is on getting your name out there and how you have decided to grow. That's always an interesting question for our team.
Our whole marketing strategy from the early days was like word of mouth. It was I got started doing this particular type of investing through a subreddit called Personal Finance Canada. So if you go on there and you say, hey, I have some money I want to invest, what should I do? They'll invariably give you the exact same advice, which is exactly what our product is designed to help with. And so, the product was essentially built for that community. And when we talked about it on there, people immediately understood what it was and how it could be helpful to them, and they would sign up for it. And so that was like our entire growth and marketing model in the early days, was like, just make occasional posts on there where it's appropriate, and make something that the users love enough that they talk about it. And so it's evolved since then. That was like kind of the core in the early days. These days we have marketing partnerships with the brokerages themselves. So one example is our brokerage partner in Canada, Questrade. We have a marketing agreement with them where they send out emails to their customers letting them know that this tool is available for free to their customers. And, there you go. Everybody gets value out of that. And then beyond that, we're doing a lot more like active marketing these days. Not necessarily like ads, but more like doing guest blog posts on people's sites, like other people in the personal finance space, and going on podcasts and talking about what we're doing. Basically, just getting people aware that this thing exists.
So I'm going to give you the last words, but I have one other like mini story and question first. And I already told you about this just recently, but why I enjoyed so much when you signed up to talk with us today is based on a like side conversation you and I had like years ago. I went out and I signed up for a TFSA account. I signed up for and started a Questrade account. And I don't know if the time I could have had Passive or I didn't actually figure it out, because I then get confused. And like I've been in the entrepreneurship world and speakers and conferences and advisors for at least 9 years. And so I really want to know that space, and I feel like an absolute junior noob when it comes to this. So I took measures and then I got confused and I stopped, and I've never taken the next steps. I have to assume there's more like me. But maybe if you can use me as a test case, what would be my next steps on what I should do? And I maybe validate that I'm not the only one, because I am.
I think your case is very common, especially among entrepreneurs. Entrepreneurs are very comfortable with risk. And so it's probably not first nature to an entrepreneur to like set aside money for a nest egg that they might draw down sometime in the distant future. Putting together retirement savings is something that you do if you're on a salary as an employee and you've got like an employer sponsored RRSP or something, right? That at some point you want to stop doing this job and you will then live off your savings, right? But if you're an entrepreneur, it's more like, well, I'm going to build this thing and it's going to make money for me forever and I never need to worry about that, right? In theory, right?
Yeah.
Yeah. So, I mean, I get it. And I think it's probably true for a lot of entrepreneurs that it's very easy to overlook building a nest egg, right? Especially if like your company is your nest egg. This thing you're doing is the thing that, you're putting all your eggs into that basket, right? Obviously it's risky to do that. And personally, I think it's a good idea to try to like de-risk as much as possible. If you think about it, like you look for investment advice on like, what stocks to buy, right? And people might say, go buy the stock. And then you'll invariably have someone saying, that's a bad idea. Don't just buy one stock, diversify, buy all the stock, get an index fund, right? And that's very much the investing philosophy that we try to promote at Passive, that you should be diversified rather than concentrated in a single thing. But entrepreneurship is like, it's not just concentrating yourself in one stock. It's like you're concentrating everything into like this one thing that's, tiny compared to anything
Maybe
over
you need a new
here and
user
much more likely
experience,
to
like
fail.
big red warning signs. Is like,
So it's
diversify, protect you from yourself.
yeah. Yeah. So in terms of like advice to you, I'm not sure exactly where you
Yeah.
are on the journey. Like you got to the point where you opened some accounts and you thought about doing it. I'm not, I would say like I can give you some book recommendations, not off the top of my head, but I could kind of like send some to you after the fact, and you could probably post them on the link to this if you want. Read about it and learn about what you need to do for investing. Learn about what an index fund is, why it's helpful to invest in those instead of companies directly. Learn about how you can structure the risk of your portfolio by balancing between stocks versus bonds. That sort of stuff. And then once you figured that out, then you'd be ready to use a tool like Passive to actually like construct that portfolio.
I think there's a lot to this, like de-risking entrepreneurship. It's a whole way of there's probably a workshop or a presentation on that.
You write a book on that.
So is there anything that you want to share or talk about or leave as a message that I haven't covered or brought up? And I guess I'll give you, you can say anything, but I'd also like specifically about your journey of having started a business, being self-employed, like anything that you wish you had been told earlier, I guess is the kind of things I want to make sure we get into.
I touched on this a bit earlier in terms of like, chasing venture capital money and how it's probably not a good use of people's time. I'd like to kind of reiterate that as a point that you should take home and think about if anybody is considering doing that. It's not that it's necessarily a bad idea, but that it has a high probability of wasting your time. And so if you don't have a very structured game plan for how to do it, you'll probably end up spending a lot of time and have nothing to show for it. And it can be psychologically damaging as well, because when you're going out there asking people to invest, you're implicitly asking them to like believe in and validate the idea you have. And most of them are going to say, no, it's a terrible idea. Why would you do that? Stop doing it. It's like getting punched in the face over and over and over again. And hopefully at some point you get a handshake, right? So, it's not that it's useless. You can get really good feedback from that as well. But, in our experience, the feedback you get is all over the place. We get some people telling us, this is a great idea, but you're too early. Other people saying, this is a horrible idea, and you're going to get steamrolled by all these other guys. And, like completely contradictory information from all sides. And it makes it very difficult to choose what you're going to believe. And at the end of the day, none of that really even mattered, because the things that we pitched in the early days worked. And what a lot of these people had to say was just not actually helpful in the long run. So I mean, there's that, and maybe the other side of things is like the value of being in Atlantic Canada. That's something that I think is underappreciated, both like here in Atlantic Canada and maybe even outside as well. I personally, I think this is the perfect place to have a business. I'd like to say that it's a bit of a competitive advantage for us to be based here, because the cost base of operating a tech company is way lower here. It's probably half what the cost would be of doing this in Toronto, and a quarter of the cost of doing it in San Francisco or New York. which means that we don't need to go raise $1 million in order to do the things we want to do. Instead, we can bootstrap it. We can get small amounts of money here and there. We can leverage government programs. We can get customers early and get them paying for us, and we can snowball it
Yeah,
into
those are
something
great
that's
words.
sustainable a whole lot more
So
quickly.
I'm going to call it right there. I thank you so much for your time to date. And we're going to close down the conversation right now. I'm going to go to, we're going to go and there'll be a little networking. Feel free to have a chat. And if you're on listening to this on video, please feel free to reach out. But thanks a lot. I think that these conversations, like there is a lot of commonalities and some of the, like what you feared and the challenges you had, like it's a commonality. So it's really interesting after we see another 4 or 5 of these chats about the similarities will outweigh the differences, which I find very interesting.
Yeah, I think that's probably true.
Thank you.
Well, thanks a lot for having me, Levi. I appreciate it. It's a great conversation.